Let's go over right now. Of course, every Tuesday and Thursday, we are joined by our man Tim Ord of the Ord Oracle. Strongly recommend checking his website out at ord-oracle.com. You get his newsletter, book, and you can contact him as well. Additionally, if you go over to the services tab of TFNN, we have two fantastic webinars from Tim Ord. That is the Secret Science of Market Tops, which we've had a very toppy market, or at least it seems like we have. So I strongly recommend checking out that webinar if you want to know for sure. And then, of course, the 6 secret ratios every trader should know. Tim, how are you doing?
Good. There is quite a bit of stuff going on.
Yeah.
Let's start with chart 1. It's kind of a review. But anyhow, the chart 1 is a Zwag breast thrust indicator. We talked about it. We got a signal here in January, I think it was. Anyhow, to get to define what the Zwag breast thrust indicator is, it's advancing issues over total issues and take a 10-day average of it. And to trigger this ZBT, Zwag breast thrust indicator, it needs to get to 0.4 or lower, then rally to 0.6 or higher within 10 days or less. We actually got down to 0.41, but it rallied to 0.61 in 6 days. So in my opinion, that's close enough. And a lot of times, Zwag breast thrust indicators kind of form a support area. So I marked the previous times Zwag breast thrust indicators on this chart where it got signaled, and I put the ZBT suggest support. So we have support around eyeball, and it looks like about 5,800, which is basically the recent lows of December, January. So that's supposedly this indicator only gets triggered in bull markets. So we'll see how that gels out in the coming months. But anyhow, that's bullish. Chart number 2 is an indicator that I use to find panic in the market. Panic in general is energy in the market. And I use a trend to figure out where the panic is. Trend readings of 1.2 or higher predict there's panic in the market, and usually panic only forms at lows. So I got a 3-day trend, I got a 2-day trend, a 5-day trend, and the top window is a 10-day trend. Over the last couple of weeks, the 3-day, 2-day, and 5-day trend all got into bullish territory, but the 10-day never did. It got, I think, 1.11 or something, up in that range, 12 maybe. Not quite to the 1.2 area, and these numbers are not chiseled in stone. I mean, it's usually in those vicinities, but the 10-day trend never did get there. That's 2 weeks of trend readings and panic levels. That's usually quite a bit of energy to push the market up for weeks, if not months. And I noted times in the past, it shaded in tan there, where all 4 trend averages reached bullish levels. And again, we didn't quite get the 10-day trend up to 1.2. So it doesn't have quite as much as energy as those previous times I marked in shaded pink. So anyhow, this rallies. It doesn't really. It has some power. You can't ignore it, but it doesn't have a great amount of power. So let's take a big view of what may be developing here, and let's go to chart 3. And chart 3, we actually talked about this in the past, and this is a monthly chart. It looks at the big picture, and we actually did hit a new high in January compared to the previous high. I think it was in November. So we actually did hit a higher high on the S&Ps. On the monthly chart, didn't have a closing high, but we did hit a higher high. But if you look at the bottom window, the SPX-VIX ratio, it had a lower high. And I think there's a good chance that the current rally that's trying to get going right now may hit a new high. And if we do hit a new high sometime in this month yet, and this ratio, SPX-VIX ratio, on the monthly time frame doesn't close at a new high, I'm thinking you're probably going to have some sort of a high here. And this market it's not real bearish. These Zwag breast thrust indicators, the 2, the 3, and the 5-day trend all suggest that you can have a decline, but not probably a big one. So I'm thinking the market may flip sideways here.
I see.
Not a big decline. It's going to be kind of a sideways year. That may change as it's going forward, but I don't like what I see on the SPYs. Ideally, you want to see the SPYs hit a higher high as the SPY is hitting a higher high. And so what that means is the VIX is starting to rise. And normally the VIX starts to rise before the market actually tops out. And so I'm thinking we got a bearish sign on the monthly charts. The weekly charts, not so much yet. So we'll see how that plays out. But so it's kind of, these turns, bottoms are a lot easier than tops, I'll put it that way. Bottoms, you just blow out. And usually you walk into that trade when the whole thing's just totally blowing up. And you try to walk in those bottom trades at the worst possible time you can find. Because when you get into the worst possible times, you usually can't get any worse. So picking bottoms, if you're an experienced trader, you walk in into a death trap, I guess you might say. But
Sure.
Tops take longer. Sometimes they can form several months or even several weeks, and not several months to form. So I'm thinking we may be doing that here.
Well, perfect. Well, Tim, please stay right there. We'll be right back after this break. Folks, we'll be right back. Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Tim Ord of the Ord Oracle. You can go to his website at ord-oracle.com. Tim, before we went to the break, we were looking at the monthly SPY along with the VIX and that SPY-VIX ratio. Curious if you had anything else you wanted to add on that.
No, it's just a warning sign here. It's on the monthly time. And actually, let's go to chart 5.
Okay.
Here, anyhow, this chart's a little bit messy, but the second window up from the bottom's the VIX. And I put a Bollinger Band on that VIX. If you notice back in December, how the Bollinger Band started to come together. If you know, those pink boxes on the VIX there, if you notice, the Bollinger Bands are coming together and they got really narrow ranges. That was kind of a warning sign that volatility is going to kick in. Volatility in the market usually is to the downside, not to the upside. So we got another situation on the current thing on the VIX here. If you notice, the VIX is kind of have a narrow trading range here. And if you notice the VIX right now, the Bollinger Bands are even coming in more narrow than it was back in December. So we'll probably hit a new high here. And anyhow, the VIX, since it's such a low volatility, it's going into such a low volatility. Low volatility leads to high volatility. High volatility leads to low volatility. So we're going into a higher volatility probably sometime sometime in this month. Mm-hmm. But I do think we'll hit new highs. If you go back to chart 3 again real quick, if the market does hit a new high and this SPX VIX ratio fails to hit a new high, then you're probably looking at some sort of a worthwhile top. That it's hard to say where we're going to go. I think basically the blue area I have on the SPY chart, that's where all the high trend readings occur at. And those high readings are on the trend is a support area. But if you notice on the SPYs, I got a place there in pink that have gap, a big gap there right around, 585 area on the SPY. Mm-hmm. You see that? But anyhow, I think we may hit a new high, and sometime probably late February, maybe early March, we're going to go back down and fill that gap.
Okay.
So that's my thinking. That may change, but that's a possibility going forward here. So volatility is probably going to pick up before the month's out, and that gap, that'd be a January gap around 585 may get hit.
Yep.
So we're going to get some volatility, I think, is coming. So we're going to go up, come back down. Then from there, I don't know. So, but this year is going to be a kind of a difficult year for our trading. It's not going to be trending like it was last year and year before.
Sure.
So, but I'm still long right now. And actually, as we're talking here, we get a trend of 1.2. So the current rally may continue here.
I see.
So we'll see how that kind of short term, kind of up, probably a top sometime mid-month. then back down maybe for the months out to that 585. A lot of volatility. So that's that.
Yeah, that would
questions on it, or
that would be quite the move. I mean, you know, and you see some. I mean, even looking at this chart, right? Like, I would say it's like there is some, honestly, like, inherent weakness in this. You know, we consistently keep trying to break those highs, and we just crack back down, whether that's on news or tariff or whatever it might be. You know, and then we try to go back down or try to go back up, and we crack down again. So I mean, you know, a 485 play would be quite interesting in this market for sure.
Yeah. So that's I don't know. It's the market gives you clues. It never gives you a black and white answer.
Absolutely.
It just gives you, so, and that's the hard part about this game. So you got to watch what the clues are. But right now, you know, if you look at this chart on the SPYs, you know, over the last 12 days, not even counting today, we got a trend 1.21. Say we closed there. So over the last 12 days, 6 of those days had trend readings of 1.2 or higher. So that's enough energy to keep going up. You know, I think time's running out.
Certainly.
You know, we could get a new high here, and then from there, I don't know. So let's look at the gold market. We got a little bit of time left.
Oh, yeah.
All right. You got to keep the monthly charts, rule the weekly charts, rule the daily charts, rule the hourly charts, and all the way down. So you really want to take a look at the monthly charts. As long as that monthly chart's in your favor, chances are, if you go with that, you know, bearish or bullish signal, you should make money, because the bigger time frames rule the smaller time frames. And we're on a buy signal, I think, from May of 2024. That buy signal still in force as long as those two indicators, which is the up-down volume bands, client indicators, stay above the mid-Bollinger Band, and so far they are. So bigger trends up. Chart number, okay, here's some stuff. It's kind of a warning sign here. This is not a major significant high, but we might see a consolidation start. The reason why, the top window is GDX. Next window down is a daily cumulative up-down volume with this Bollinger Band. Mm-hmm. Next window lower is a daily cumulative advanced decline with this Bollinger Band. And the bottom window is the GDX GLD ratio. And I put the Bollinger Bands on there because normally if you start hitting above the upper Bollinger Band, you're running into resistance. And all four of those indicators, the GDX, the up-down volume, advanced decline, and GDX GL ratio is hitting the upper Bollinger Band. So the market has got away from the mid Bollinger Band too far. Normally it kind of pulls back to the mid Bollinger Band. So we might see a short-term consolidation, not a top of any consequence. But all the blue lines I've listed there on horizontally or vertically rather, are times when all four of those indicators reach the upper Bollinger Band.
Sure. And
they had mild consolidation. So I'm thinking we're probably going to hit a mild consolidation here, but it's not going to affect the bigger trend. And we go to chart.
This should be 7.
7.
Yeah.
Or 7. Yeah, 7. This is a little bit longer term indicator. It's not short, but it could pick out multi-month type tops. And what it is the RSI of the HUI gold ratio. Once that ratio gets above 70, a lot of times you'll have a multi-month, if not at least a multi-month type consolidation, even though you still be in an uptrend. And I marked the times going back to looks like about 2000, whatever. And we're kind of like middling right now, around 50. So the market could rally several more months before that ratio gets, if it indeed gets up to 70.
Sure.
But in the past, it's worth paying attention to, because this is on a weekly time frame. So it's a weekly roll the daily. So we're not even near. So even though there might be a consolidation here short term, it's not an intermediate term indicator, or according to this intermediate term indicator, we're not near any significant high. So that looks good. Chart 8 is the cumulative up-down volume advanced client indicators, and they're well above. They're kind of actually, if you run a line across the 30 range on both those bottom two indicators, you come up with kind of an overbought market. If you draw trend lines up to those highs, normally a lot of times they pick consolidations, they pull back. So it's kind of another indicator, even though it's a powerful uptrend going here, it's due for consolidation also.
Tim, thank you so much. We're looking forward to talking to you Thursday.
All right, talk to you then. Thanks a lot.
Stay right there, folks. We'll be right back.